Folks, if you watch my channel for any length of time, you know where there is one individual when he's referenced in the title I will look at, and that is the one and only Mr. Warren Buffett. Last Saturday, Warren Buffett released his yearly, I don't know, I'll call it investor letter. It's a must read for Warren Buffett fans. He's been doing this for like 60 years. There are entire books and investing strategies based on his letters. And the one and only Taylor from Life Goal Investments was gracious enough to read it, as have I. So I want to ask him about it, ask about Warren Buffett, all that stuff. But let's welcome Taylor from Life Goal Investments. How you doing, buddy?
Yeah, thanks for having me. We had a little break and now we're back and we're better than ever.
There you go. There you go. Would it be fair to say that Warren Buffett's investor letter is must read for Wall Streeters? Is that fair?
Yeah, no doubt. I think it's a must read for more so for the average person than I think it is for Wall Street. What Warren does so well throughout his history is just breaks things into layman's terms. And that's what the greatest people in any career, a great doctor, can explain how to do brain surgery in a way that you and I can understand it when we have no idea what's going on. And that's what he's so damn good at. And it's really impressive. He and his partner, Charlie Munger just does it in quotes, which are phenomenal.
Yeah. He does it in little phrases. Warren's a little more story, right? Because again, I think Warren Buffett knows stories resonate. Where Charlie Munger, I think he's 99 now, is like, screw it, I ain't got time for that. Let me just tell you what I think.
I'm going to throw the fastball. I think that Warren doesn't ruffle quite as many feathers. So I think that he makes better sense as a CEO, and Charlie just fires fastballs whenever he wants to.
Well, let's be very clear. I think Warren Buffett, like many of us, you and me included, we have egos. And Warren Buffett likes to be the old sage. He likes to be brought on CNBC and Bloomberg and Market Watch when there's turmoil. And if you're always throwing fastballs, you probably don't get invited a lot. But if you're that big teddy bear who's going to make everybody feel good and slam you without slamming you, you get invited back. So I think Warren does it on purpose.
Yeah. And before we peel down into, whatever economic data or you want to speak about on the letter as a whole, the one thing I came away with is just like, one, he does have an ego, but he's also incredibly modest in how he talks. He says, listen, I've done pretty well. Like, no, you haven't, dude. You're the greatest of all time. You haven't done pretty well. You've done obnoxiously well. And then the other thing that I thought was like, I'll say this, it's super corny, but like very heartwarming, is like, you also come away from this letter saying like, these two, Warren Buffett and Charlie Munger, are also two of the greatest friends of all time. Like they really are good, honest friends.
Yeah, they're really ham and egg. They really do play off. I think I'll say it. I think one of the reasons Warren Buffett is so successful is because he had Charlie there to ham and egg, kind of protect him and push him.
And no doubt. And in the past, and I'm going to forget the gentleman's name, there was a third gentleman that was a partner as well. And he was a gunslinger. And this was probably in like the 70s, I want to say, somewhere in that ballpark.
Yeah. I don't remember his name.
Eventually what happened was he wanted to lever things up, and he had a couple bets that went south, and they just began to squeeze him out and say, listen, this isn't the way we're going to do things. We're long-term sustainable businesses here. We're not here to catch the hot dot. And that was also maybe even a good segue into what this whole letter was about.
Yeah. So you read it, you produced a wonderful reel or story on Instagram. So make sure you plug that. But what were your big takeaways? And I'll share mine kind of after the fact.
Yeah, I think the biggest overarching takeaway is that long-term investing is the only way to successfully duplicate returns over time. It's that compounded interest, slow grind higher. I don't necessarily always agree with Warren and Charlie's position. They like concentrated positions in great companies. And I think if you're able to do the work, that's really good advice. I just think that that's coming from a real financial professional standpoint. I like further diversification, but nonetheless, the point of what they were saying is find that long-term sustainable good. In their terms, it's a company. In my terms, it might be a broad basket of diversified assets, but find that long-term thing that you can trust and rely on. And in good times or in bad times, continue to systematically invest in it. They talk a lot about, the fact that we've had gamification, and that letter referenced that, and referenced the gambling mentality that's been brought about, thinking about short-term, really outsized returns. And they said, listen, that just doesn't work over time.
Yeah. I think and again, I think this has been pretty consistent. Again, I think Warren's been doing this for 63 or 64 years. This is not the first time he's brought this up, right? In my world, not a professional money manager. I have no desire to do any of that. There are investors which obviously I will put Warren in. There are traders, and then there are speculators. And just like the dot-com crisis, which got me, right? It ran up. I remember saying, probably out loud, but certainly in my head, I am better than Warren Buffett. I will admit to that.
You were Dave Portnoy. You were Dave Portnoy.
Yeah, it was David Portnoy on a much smaller level in 2001 or 99 or whatever that was. And for a moment, I was. And then I wasn't.
Yep.
And again, that's something that I have never forgotten. I appreciate. My thing is obviously real estate. I actually own some stocks now, which I haven't in 20 years. But I'm an investor.
And you
Little
entered
tranches.
at a pretty darn good time. And I'm not a market timer, and I don't necessarily think you are either. But you did do your diligence and say, listen, like, you are a very, very good economic prognosticator. I will give you that, and never take that away from you. And that leads to a lot of what happens in the stock market as well. Is if you can get an idea of where the economy is going, and then maybe just a slight edge as to is the market over or under appreciating this. And that's how you kind of dictated your entry point. I think that you got in at a really good time.
Yeah. In hindsight, it looks pretty good. But yeah, I will be in the stock market likely for the next portion of my life, but it will be on concentrated stocks. I will never own more than 10. I don't think I can look at more than 10. Most of those in just where I'm at in life will be dividend based. There'll be I'm thinking one or two kind of growth or flyers, depending on what you want to call it. But that's it for me, right? I'm going to continue to daily grind on real estate, look to create great deals, seller financing, all that stuff.
But something very specific that you said there is like, you can't look at more than 10. And what you're saying there is you're doing research on 10. So if you are not willing to do that, which I think is more of the broad investing public, you have to take a more diversified approach. And that's what I always preach, because I think the vast majority of people in my audience that I speak with are like, listen, I'm not doing company diligence. I'm not peeling through 10K reports. I'm not sitting on, pins and needles when earnings reports are hitting for my individual companies. I want to have that, slow and lazy approach to growth over time. And if you're going to do what Michael does, good for you. Do it, but be serious about it.
Yeah, be serious. Again, I think for most people, and I think Warren Buffett says this all the time, right? Just indexes or ETFs or whatever the right answer is. And I think that's the right thing. I don't work anymore, right? I don't have that 60-hour commitment to, sell my hours. So I enjoy this. I've been reading the financial news for 30 years. So I feel like I have a solid baseline. And I think most people should be index or ETFs, which is the right way to go. Because again, if you're not willing to do the work, well, then don't place the bet. That's what I think.
And that's fine. That's fine. Yeah. You still want to invest. Investing is the way to build wealth over time. Like we've seen it time and time again for any wealthy person you speak with. Very, very few of them would ever tell you they don't invest. But they might not be putting in the work.
That's a Warren Buffett thing, right? He says bet on America. And again, I think that was another theme in the letter, which it was sometimes it's more smacky in the face. This one was probably more subtle, but bet on America. And that's what you can do with index and ETF and, dollar cost average and invest, at $100 a month or $250 or whatever you're comfortable with. It's the right answer for most people. So,
and it was interesting. This wasn't as economically oriented. I wanted to get a little bit of his thoughts on the outlook of the market.
I was hungry for that too. He didn't go there.
Not at all. Not even one bit. He talked a lot about the long-term holdings that they had and just the power of that long-term growth. He talked about, I think it was Amex and maybe Coca-Cola that he had
Amex. Amex. Coca-Cola is his longest hold. Amex and Apple. I mean, he's very concentrated now.
Yeah.
He's very. So the other thing I took from the letter is he's clearly going after stock buybacks. Right? Remember that? He sort of called out Elizabeth Warren and Bernie Sanders, basically saying they're either stupid or, I forget what the other quote was, but I thought that was very interesting because again, he's like stock buybacks are how companies reward their shareholders. So talk about that.
Yeah, I think when you look at stock buybacks, it's like as a company, you work for the shareholder. As a CEO,
as a public
as a board of directors, you work for the shareholder at the end of the day. So you have a couple options of what you can do with your money. You can stock buyback, you can pay a dividend, or you can go out and R&D, research and development. You can spend that money for future growth. If you're Coca-Cola, they don't have a ton of R&D that's taking place. They're not creating a ton of new sodas or, breaking out into a verging economy, whatever it is. Their global presence, and it's there. So what are they going to do when they have excess cash flow? They're either going to pay it in a dividend or buy back their own stock, both accretive to the shareholder at the end of the day. They're doing the right thing by the people that vote for them, which are their shareholders. This is what you would want a politician to do. You would want a politician to take the votes of its constituents and make decisions based upon that. Shareholders are the voters of what the CEO should be doing.
Yeah. One of the things I always thought was really funny about this stock buyback thing is that sure, it makes sense. It gets headlines, all of that. But you actually said it. There's other ways you could skin the cat. So, okay, you're going to tax me. I think today, 1%, they want to take it to 4 or 5%. Let's say it's 10%. Okay, great. I won't do stock buybacks. I'll just issue special dividends.
Right.
What the hell?
6 in one hand, half dozen the other, whatever you want to call it, guys.
Yeah, great. So special dividends not taxed, stock buybacks taxed. Guess I'll do special dividends.
Guys, we're in a capitalistic society. And I hate to say it, there's been no other economic format that's proven to be nearly as successful as what we've created here. And I'm not saying we created here. That's not what I'm getting at.
No.
But what I'm saying is there is no better economic system to grow a country than a capitalistic society. And that's what we've done. And what do you do there? You do what's in the best interest of making more money in the future. That is the game that we play. And when that fails, a new entrant comes in and takes over that position. Now, I'm not saying there doesn't need to be some guardrails when it comes to monopolistic behaviors, whatever. I totally get that. But when you start bringing those guardrails in too tightly, you start getting in the way of the free market economy that's worked so darn well for this country.
Awesome. So where can people find you? You're doing these walkarounds on the New York Stock Exchange. You're having conversations out in the snow. You're really blowing up on Instagram and TikTok. Where can people find you? Because you are a must follow.
Yeah, thanks so much for saying that. I'm actually I had previously been telling people to go to Instagram, but I'm doing more lives on TikTok these days. So find us on TikTok at Life Goal Investments. If you don't have TikTok, at Life Goal Investments on Instagram.
Yep. Do me a favor, folks. Go to those platforms and tell him you came from one rental at a time. Let him know his Monday time with us is worthwhile. Thanks, buddy.
It has been. Thank you, Michael.